Now to the economy more broadly. Hit a number of milestones, of course, back in 2016. The Federal Reserve did raise interest rates, as we were just discussing. Growth accelerated, especially toward the end of the year. The unemployment rate continued to drop, and the housing market saw prices hit a new peak. So what should you watch over the next 12 months? Diana Olick has a look at housing. But first, Steve Liesman with the outlook for the broader economy.
Predictions for the economy in 2017 depend chiefly on how much of President-elect Donald Trump's ambitious agenda gets through the new Republican Congress. All of that leads to one easy prediction for 2017. We're about to see a whole lot more stock and bond market volatility when it comes to the making of economic policy than we've seen in the past. Congress leaks like a sieve, and everyone likes to talk, so the chance of one proposal or another becoming law will go up and down with each news flash. It goes without saying that Congress will become at least as important as the Fed at moving, if not the whole market, then certain parts of it, like banking stocks when it comes to reforming or repealing Dodd-Frank, or health care when it comes to Obamacare. Second prediction? The Fed will hike at least twice, but likely 3 times, depending upon how quickly new fiscal programs get put in place. And the final prediction? Growth will accelerate to the 2.5% to 3% range. But sustained growth north of 3% will likely elude the next president, at least for next year. For Nightly Business Report, I'm Steve Liesman.
The housing market was on a tear this year, sales and construction surging ahead, but 2017 will see big changes. Home sales will slow. Don't get me wrong, there is plenty of demand for homes, but listings continue to drop and mortgage rates are starting to rise. Younger potential buyers may want to get out of those pricey rentals, but with affordability weakening, they may just not have the means. Mortgage rates will rise. Mortgage rates spiked after the presidential election, and the gains will continue, albeit at a more moderate pace. A potentially stronger economy and job growth are fueling the rates, but will not be enough to counter the higher costs, especially for first-time buyers, of getting a loan. On the other hand, if the president-elect does make a big move into banking deregulation, it could get easier to get a mortgage. Mortgages more expensive, but more available. Home prices will cool. The spike in mortgage rates has already made homes more expensive for buyers, so sellers may have to come down a bit if they want to get that fast offer. Tight supply has been pushing prices higher far faster than income growth, and in a lot of markets, prices are becoming unsustainable. They're unlikely to drop, but the gains should shrink. If only that were true for rents, which continue to push through the roof. For Nightly Business Report, I'm Diana Olick in Washington.